Thank you, Tarek. Interesting stats and analysis. May I ask my panelists, please, Emile, Cubeisy, Walid, Hanna, Tarek, Kabrit, Ziad, Mokhtar, and Barig, Siraj, to the stage, please. Come on, cheer for them. I'm going to start with a quick introduction of everybody. Emile, would you like to start? Knowing that Emile has 10 years of experience in digital technology. He's the director of Jiran, Shufi TV, Get to Play, was a production. We'll take 5 minutes just listing them. And does a lot of elements with technology and promotion. Emile, what do you do at IV Holdings?
Okay, so just to give you a little bit of an idea of IV Holdings, which is Interactive Ventures Holdings, always reads as a 4, Roman numeral 4. So I have to make the clarification. IV Holdings is an early stage investor, particularly focused in the internet and in the interactive space. And it was really set up with having identified that there was a clear gap in active investing in the early stage within this space. And we set out on a mission in April of 2008. We're part of a much larger investment company called Accelerator Technology Holdings. But we had identified that that sector needed a unique type of management capability and a unique type of support and earlier and smaller size investment potentially. So we launched IV Holdings in April of 2008. Basically, we invest between $250,000 to $2 million in internet interactive venture companies across the Levant region and in the GCC as well. And in Egypt so far, we haven't gone out to North Africa yet. With a real focus on creating a community culture amongst the entrepreneurs themselves. So we've realized as first generation entrepreneurs, as first generation venture capitalists ourselves, that a lot of the value added not just comes from us, but comes from a portfolio of like-minded entrepreneurs working together and problem solving together. So we have a very synergistic type of portfolio. We've made 9 investments to date, and I'm sure you'll ask a lot of questions.
I will. I definitely will. Mr. Walid Hanna, Managing Partner of Middle East Venture Partners. You were the CEO of the Arab Business Angels Network. Can you tell us a bit about that and what you currently do with MEVP?
Sure. The Arab Business Angels Network was founded by Dubai International Capital back in Dubai. It was an initiative to foster entrepreneurship and to seed early stage companies. We ended up investing in 4 companies. We had an angel network, and then the crisis hit really hard Dubai. So, well, basically the funding stopped, and we had to move on. So I left DIC about a year and a half ago, and we started a fund, our first fund. It's a VC firm actually called Middle East Venture Partners, and we raised our first fund. Invested so far in 7 companies.
Where are you guys based?
Sorry?
Where are you guys based?
Based in Beirut.
Okay.
It's a Cayman fund, but the investment manager is based in Beirut, but we try to cover the region. So far we have 4 portfolio companies in Lebanon, 2 in Dubai, and 1 mixed with Syrian and Lebanese entrepreneurs based in Hong Kong. That's more or less it. The investment strategy is probably similar to that of IV Holdings. Early stage, investment ticket size as low as 100K. We seeded a couple of companies, and as high as probably $1.5 million.
Okay. I'm going to jump to the next panelist, Mr. Tarek Kabrit, Principal at Riyada Enterprise Development. Tarek, you were at Abraj, you were a principal partner with Siraj Capital. You've been around for a while, and can you also tell us a bit of what you currently do at Riyada Enterprise Development and a bit of your history?
Sure, absolutely. We're setting up a new office for Riyada Enterprise Capital in Beirut. As some people know, Riyada Enterprise Capital is part of the Abraj Capital Group. Historically, Abraj used to focus on the large deals, but almost a year and a half ago, they decided they want to move into the SME space. So they launched Riyada Enterprise Capital, which is a $500 million SME fund for the region, the MENA region. Some countries within the region actually have their own dedicated funds out of that $500 million regional fund. So you have an office in Beirut, an office in Amman, in Palestine, and in Egypt. We focus on slightly larger deals, so where my colleagues stop, actually, we pick up.
Okay.
We do $2 million up to $15 million deals. We're sector agnostic, so we invest across sectors as well.
Okay, that's going to get you a bit of fans at the end of this session with the amounts that you're mentioning. Next, Mr. Ziad Mokhtar, Principal of Ideavelopers. You also handle a $50 million fund. So
Yeah.
would you like to tell us how that works?
So Ideavelopers is a Cairo-based venture capital firm. We're actually the venture capital arm of BFG Hermes. We initially had a $10 million fund, and then we raised another $40 million fund. So total funds under management are $50 million. We invested kind of 60% of that fund. I think we're more in the early stage, starting at $1 million ticket size, up to $4 million. So far, we've invested in 17 companies in different sectors, some in kind of hardcore technology like semiconductors, and some in more like online and payment technologies. We're focused more on Egypt or startups that have an Egyptian angle, whether they're targeting the Egyptian market or launching out of the Egyptian market.
Okay, and last but equally as important, Mr. Barig Siraj, I got that right? Yep. CEO of ICT Ventures. Barig, in addition to having an extremely good sense of humor with our pre-talk before, also has worked in everything from banking to broadcasting to airline. Can you tell us a bit about your background and what ICT Ventures do?
From a background perspective, from the broadcasting, I actually headed the ART broadcast center in Avezzano, Italy, as part of the Della Group. And, but I've been through a lot of that. ICT Ventures now, which I'm responsible for, has been 3 years, and it's a $28 million or 107 million Riyal fund. We've invested around 58% of it. Our smallest investments has been, our range goes from $1.5 million to $6.5 million. Currently, we're looking at deals at $2 million range. And our focus is MENA region, so it has to have a MENA angle, either inside the company inside the MENA region or targeting the MENA region in one way or form or some of the operation. And IT sector in general and growth capital. We don't do seed. So our comfort range is entrepreneurs, 20 to 40% range. We don't like to manage. We'd like to empower the entrepreneurs and help them grow. And the reason, one thing, we're based in Saudi, between Jeddah and Riyadh. Saudi, from an IT perspective, commands a huge amount of 50% of the IT market of the MENA regions in Saudi Arabia. And a lot of the growth of the internet we're seeing from clients and so forth in Saudi Arabia, and that's where we add value in that.
All right, thank you. I'm going to start with a quick kind of discussion following up onto what Mr. Tarek Saadi was saying with the increase of VCs and entrepreneurship happening from, let's say, end of 2010 and specifically and dynamically through the entire year of how many startups have happened, how many of VCs have actually showed up. The first and foremost question, which is actually the last question on my list here, is why would people come to you? I mean, you guys look like you're friendly people, but you're gonna take a piece of their pie, right? Somehow. So why would people come to you? That's probably the only question I'll ask you now, and then just so let's see if they like you or not, if they want to talk to you, and then we'll switch the question to the audience, and then we'll see how that takes us in terms of time and content. Who wants to take the question? Go ahead.
So there's two things that I've noticed, in doing this now for the better part of 4 years, which I think are very telling. I think from the entrepreneurs that we've seen, they've looked for two things. One has been, many of them don't come for the money. They actually come for the support, and they come for the guidance. So you find great technology teams that know they've hit on something. They know they've identified an opportunity. They need help taking it to the next level. So how do we fill critical management gaps? How do we create markets for ourselves? How do we do, they really need a lot of tactical support. Or how can we benefit from a network? Can you help us, create for us the network effect for our businesses and so forth? This is one thing, and I think comes to the core of what a venture capital firm should typically be catered towards. And by the way, I'm a strong believer in entrepreneurs, critically interviewing a VC firm or an investor. The same thing with board directors, by the way. I would strongly recommend you interview everybody and make sure there's clear value added for your businesses. In those models, typically what we would do is we would provide either strategic planning support, or we would provide business development support. And it goes from the macro to the micro. I mean, there are times when I would write a letter of commitment, for one of our portfolio companies on their behalf towards a big client who would be, scared about the financial stability of the company, and why should I give them this big piece of business if they're just a startup and so forth. The other types of entrepreneurs that we've backed and that we've seen are those that know exactly what the heck they're doing, and really, look for two things. One, the financial stability for them to be able to execute on the plan that they're trying to execute. And the second thing, to give them another perspective. So they're in their box, they have a clear capability, they can see things very clearly, but they want a perspective, even if they never listen to us. They just want an outside perspective to help them validate or question their approach towards execution. Just to give the
So, no, I have a follow-up question on that,
okay,
actually. Would you, if somebody came to you and doesn't need the money then, would you be able to just help them support?
I mean, that's actually a great question, because, we've invested in 9 companies. I would say we probably support no less than, 15 or 20.
Okay.
And a lot of times what happens, and this is just, it's a very personal thing. I mean, venture investing, I keep making the case, is not private equity. These aren't financial transactions. These are people-to-people transactions, organization-to-organization transactions. And sometimes you get drawn in. It's emotional. I mean, whether we like it or not. Okay. And sometimes you get drawn in, and you're driven to support an entrepreneur on a continuous basis. Let's say he's not at the level where you need to, where the case is strong enough. So you do invest a lot of time and effort in helping them get to that level. Planting a seed for the future, so to speak. And others, you do it to learn. So, I mean, there's a lot of entrepreneurs that are well beyond my range that I, actively support, because I fundamentally learn as much as I give.
Okay. Walid, would you want to add anything to what he said? Are you convinced?
It's very difficult to add anything to what Emile was saying, because it's very comprehensive, and I agree 100% to what he said. Well, just probably one thing. We get exposed to some entrepreneurs who pretend they know everything, and they don't need anything else but the money. Okay. Then when you dig in a bit more, we realize that, yes, they need more support, and this is where we come in. But the hard part is really to convince them that they need us on something, those specific entrepreneurs. But for the vast majority, it's basically two things, as Emile was saying, some smart money. The smart part is almost as important as the money itself.
Tarek, anything to add?
Just a quick one to reiterate what Emile said, the point on having a sounding board, because many times you have the CEOs of these companies, they started the company, probably they never studied finance or anything like that before, and the CEO has to wear a million hats. So he has to do the marketing, the sales, the financing, the HR, everything. So just having a helping hand and a sounding board with them adds a lot of value, and really takes a lot of stress off the CEOs. One other point is actually, again, to build on what Walid said, is opening other markets for them. So basically some markets they don't know they exist, or that they can actually approach those markets. One example is, we're looking at a company right now that manufactures educational software. Okay. Abraj actually has this chain of schools in Saudi Arabia that we can actually allow them to sell to this school chain and expand their market. Something they never thought of, they weren't thinking of going into that direction. So you can have a different idea that wasn't in their plan and actually help grow the business.
Okay. Ziad, anything to add?
I think many of the things said are kind of spot on. I think the strategic guidance is clearly a key thing there. The money is definitely something many of them look for. I think one other thing that we spend a lot of time with entrepreneurs is giving them access. Okay. And I think of access in two ways. First, access to relevant industry, right? I mean, many of them have good ideas. They want to reach certain clients, partners, to kind of implement their strategies or validate their insights. And we help them a lot getting to sit with those, opening the door. If they have content that's valuable, they'll be able to make a case. And in many cases, that was pretty useful. Another part of access is access to people. Okay. I think in many cases, we see an entrepreneur who's really smart, who's really creative, who's really has the passion and the dedication, right? And we feel this is strong material, right? but there's certain part of success that he lacks, right? And some of them are kind of in their own circles, okay? So we clearly see if only you had a co-founder who's kind of have a very strong marketing perspective, this opportunity requires a very strong marketing guy. And we would spend a lot of time, even before an investment, just matching him to someone like that, whether it's someone he'll hire or someone who's going to be his co-founder. I think that's important to many entrepreneurs.
Okay. And Barig, anything from a Saudi perspective or a MENA perspective that you can add on to why people come to you and let them take a piece of their pie?
One of the things for me is that since both, Emile, Walid, and Ziad are more on the seed stage and to some extent focus on these countries or stronger in certain countries, for me, I would love to complement them and co-invest with them and help them grow in the Saudi market where there is the huge market and so forth.
You actually kind of jumped into the next question that I had, which is, have you guys worked with each other before? And why not?
Actually, we do.
So you do. Yeah. And this is one of the reasons why.
And hopefully with everybody here as well. We've looked at deals together on a different perspective. And the thing is, we complete each other. And that's one of the things that entrepreneurs need to look at. Emile said it right. You need to interview. You need to look at what each of us adds value. And maybe two of us are better than just one investing. And that's where it is.
Okay, thank you. I'm going to start directing questions to the audience. Just for you guys to know, we've got people who are experienced in Jordan, Beirut, Saudi, Egypt, and Dubai, and some regional expertise as well. So please drill them. You need to know that as much as you guys are entrepreneurs, they are also the same somehow. They're the first generation VCs. So please, they've all accepted to answer any question that you guys have. So let's have this proper. Some show of hands. Let's start with the first row. Can you speak louder, please?
I have a question regarding the financial structure of entities that actually approach you. So as entrepreneurs come to your offices, do you see them with a substantial contribution from the friends, fools, and family? Is it mostly the founder's money that is actually invested? What's a typical financial structure for an entity that comes to approach you?
So somebody comes and approaches them. What is the financial structure that they expect from him?
Who are the usual investors prior to the stage where they actually come to you?
Oh, so who actually invests and helps you get your funds?
No, I got the question.
You got the question? Because I couldn't hear properly.
No, I can go first. Well, I'm going to talk about our own experience in Lebanon, mainly. Before coming to us, most of the entrepreneurs or the companies have already been funded by angels, friends and families, and fools sometimes. And most of the time, they have been awarded a kafalat loan. This is a specific Lebanese loan that is guaranteed by a public institution. So they get this loan. It's a low-cost, subsidized loan, and then they come to us.
Okay.
Typically, angels and kafalat, this is what we get in Beirut.
Okay, why did you say fools sometimes?
Fools, because unfortunately, sometimes we get exposed to investment opportunities that are ridiculous. Unfortunately, some make it, some fail. So
ratio? Anybody can give me a ratio of horrible ideas versus, not necessarily horrible, but bad ideas versus
I think it
good
depends on the stage of investments in the company. So relatively earlier stage companies, you would have a different ratio than later stage. So
okay.
The really early stage ones, I mean, I read it somewhere, I'm not sure if it's right, it's 1 out of 10 actually make it, and 9 don't.
But I don't think there's such a thing. I honestly don't think there's such a thing as a crazy idea. I think everybody has a perspective on a market opportunity, and we may not agree with it, but that certainly doesn't make it crazy.
No, I mean, but just to be clear, by crazy, what I think we're talking about is more non-feasible than bad idea.
Well, that's what I mean. No, absolutely. I mean, I think, what I deem to be non-feasible, the market may completely slap me across the face and say that's 100% feasible.
Okay.
But I just want to add to very quickly to Faiz's question. I would say, I mean, the way we look at it is, it's a basket of risk. And I think, you know, when an entrepreneur has been able to raise money or commit through one way or another money himself towards his vision and towards his belief, it diminishes other risks that we would typically look at, because you know, we'd feel that, well, he must believe enough to be able to overcome this risk and this risk and this risk. So it comes in, I wouldn't say that it's critical, because we've funded companies where entrepreneurs have committed in other ways, subsidized, you know, severely diminished salaries, X, Y, Z, BW. But it's always looked at as part of a risk basket. And it's a very strong statement when an entrepreneur comes and puts his own money behind a venture in terms of how just naturally we look at risk.
I'm going to take a question from the second row.
May I add something?
Sorry. Oh, yes. Yeah. I'm like, who said that?
I think we see two types. One type is the one who's trying to kind of have a cash cow next to whatever idea they're doing. So do some services and finance the product development. And then the other side is the ones who kind of bootstrap or get money from friends and family. The first is a little bit problematic to us because first of all, to Emile's point, it shows some lack of confidence in what you're doing, right? You're hedging your risks too much, right? We'd rather people focus, find ways to focus on their idea, on whatever they believe in. They want to see conviction. I think we're lucky now that there's so many kind of incubators and seed funds coming out there that could help those companies in the early stage. I think that's a much better approach than just trying to do a completely different thing, complete distraction, and not focusing on your dream.
And the conviction part is the key, because if an entrepreneur would come and say, I want to exit some of my shares with this round, it makes us feel uncomfortable because he's not a believer in the dream. How can we?
Hi, how are you? My name is John. I work with Lux Capital. It's a venture fund out of New York, and I set up our kind of Middle East presence recently. What is the, following up on the syndication question, how often do you syndicate? Do you usually syndicate? Do you want to syndicate your deals? And do you usually work with other investment companies, or do you also want to include larger companies in the region that traditionally don't invest in earlier stage investments here in the region?
So we'll talk about syndication. Who wants to?
It depends partly on the deal size, of course. If the deal is big enough for more than one group to go into the deal, it makes sense in that case. And from our experience, what we've seen is sometimes a lot of these funds have actually geographical focus. So maybe if we're doing a deal in Saudi, we might look at Malas Capital, for example, and say, okay, they're a good regional partner. We don't have an office in Saudi, then it makes sense for us to partner with someone else.
Does that answer your question?
Yeah. I mean,
no, I mean, please.
Yeah, I think it's on a case-by-case basis, but from practice, we actually have more we have more invested deals with co-investors than we have alone. So I would say that the preference is to co-invest, but it's because we also invest on different stages. I mean, there are some within the hazy shade of gray that make sense that we do immediately. There's some as they grow where we come and seek a different type of expertise, as Barig was talking about, whether it's market-based or another type of expertise. But I think the general within the VC industry, there's a closeness, and so there is more of a propensity to share than not to share. What's interesting is that there's a hazy shade of gray across, because it's a young industry, and so. I would even say I would include into that whole syndication discussion even the angel investors. So we've done deals directly where we've had angel participation come in, because they provide a unique competency to help the company grow. So, but there's a lot of syndication.
If I may add to this, yeah, we definitely have a preference to co-investments. And by the way, we tried to prove this point by inviting other VCs to co-invest. We're meeting later on today with about 4 or 5 different VCs to co-invest in a risky investment. So the reason why we've invited them, because we need different points of view, and we expect added value from co-investors, value that we cannot add ourselves, and to share the risk. So risky projects, I believe, whereby we're not very comfortable, and if the ticket size is big enough and outside our comfort zone, this is where we usually seek co-investments.
Okay. I'd like Barig to add on his perspective, knowing that you do a lot of things where people want to invest in MENA, so they probably have some kind of a startup somewhere before.
We do co-invest, but one thing that I would like to point out, sometimes entrepreneurs would approach us and say, we would like Sharia compliant investors. So we don't want just, I know, but they stress on that and so forth. So if you want to play in the region, you might need to look at that from your angle, okay?
My name is David. So I built this product called newstale.com. I have a question.
What's it called? Sorry?
Newstale.
Okay.
Okay. So recruiting is key. So I just wanted to ask each of you to tell us about an experience they're proud of how they helped one of their portfolio companies recruit some key person in their
It's a good question.
Yeah, thank you.
I can take that. Yeah, I mean, we just like a couple of weeks ago finished like 6 months of trying to recruit a co-founder for one of the pipeline companies. I think we feel there's a lot of value add from that. We develop our own network of potential recruits. We try to do it kind of proactively. And it's kind of sometimes, especially when it's at co-founding level, it's kind of a dating exercise. Like you bring this guy, okay, Ahmed, meet Muhammad, and then okay, I'll leave you alone. You talk with each other. I'll come tomorrow and see if you love each other. Sometimes kind of a.
So you're a matchmaker kind of thing.
Yeah. It's al-khadba, exactly. But again, I mean that's tremendous values because the team is an essential component in the success. So that's when it's on the co-founding level, which is the most critical. On the second level, it depends on the stage of the company and the size of the company. If it's a big company, it's an easier exercise. If the investment is big, it's a $2 million, $3 million, it's easier to get a marketing guy. If it's early stage, that's trickier.
So we do it in a bit of a we do that we do that. We also do what's called the con, amongst the portfolio where they identify a recruit that they really want, and there's the cultural barrier of working within a startup or garage operation, versus something that's clearly well established with a clear career path. So they typically come to our office and they do the interview in our office. Because we have nicer offices than the garage office, and I would make a presence, usually not knowing what the heck I'm talking about, just talking about our commitment to the company, just to help the founders of the business be able to recruit, because when you go and look at the office, not to say there's anything wrong with the office, but for somebody within our cultural mindset that wants to see stability, none of these offices fundamentally represent stability. They represent fun and creativity and innovation, but they don't represent stability.
I mean, for somebody to actually give that thing a nickname of con, it means you guys have done it quite a few times.
Hey, we've done it a few times. I don't know if any of the portfolio companies are here, but we've done it a few times.
Okay, I'll take a next question.
TechCrunch. Mike.
Hello.
Yes.
Mike Butcher from TechCrunch. Guys, very good to see this. I really love the level of conversation here. It's fantastic. I was a little bit disappointed earlier to hear somebody on an earlier panel say exit fast, exit often, and I agree with you, Mr. Siraj, who said earlier you get nervous when an entrepreneur talks about exits, and I completely agree with you that investors don't, they want to see passion, they want to see commitment to the startup. But of course, at the end of the day, there is a point in doing a startup. There is an exit to be done, whether it's M&A, whether it's acquisition, whether it's IPO, maybe. But I mean, from my perspective in London, it's often hard to get a visibility in this region about the exit opportunity. Well, first of all, I'd love your funding stories. When you fund a startup, please email me. Secondly, but when a startup exits, we'd love to have more visibility from the MENA region about, the success stories, because I think success breeds success. So, I mean, are we talking media companies? NBC perhaps is an potential exit for some of these new digital media startups or social startups, or is it what are the opportunities? And I doubt you'll say IPO because that's a whole other ball game. But what are the opportunities?
Can I just to kind of go a little bit more to specific in a question, because it's a great question, but it's quite a generic one. Can we try to restrict and say what are the companies that you found eligible for an exit over the past 12 months?
Yeah, sure. Yeah? You can talk specifics.
Actually, to give an example, telecom companies are on the acquisition wagon in the Middle East. Value-added services. So any type of investment in that region that is structured in a way that a telco can actually acquire is something these are possible exits. In Saudi, when you talk IPO market, none of the publicly traded companies are IT, but there are a string of pre-IPO companies that are looking at IT companies to acquire before they go public or after they go public to buy. So those are the two areas that are immediate. Another thing from a Saudi perspective as well are professional services or IT companies on the ground when a multinational wants to come in and don't want to waste 2 years opening up the office and recruiting people, getting a team on the ground, running with it and so forth. And SAGIA, which is the Saudi Arabian General Investment Authority, has encouraged that and has seen acquisition, not in the IT sector, but in others as well. So these are 3 flavors that you want to look at that gives you. Okay?
Exit is really tricky when it comes to smaller companies. And I think everyone is trying to think of creative ways to actually achieve that in the region. 2 options that we're toying around with now at Riyada is, one is basically, because it's relatively slightly larger fund, we're looking at actually rolling up a lot of these companies together at some point, having a holding company and maybe taking that company public at some point if it makes sense in terms of industry and size. And one other option is actually, before we go in, for example, with us, we look at the Abraj deals, the bigger ones, and whether this small deal would make sense for it to be an acquisition target for the larger companies even before we go in. So we go in knowing that it can be a potential exit.
So maybe just to add a little bit to what the gentleman said, I don't believe you sell companies. I believe people buy companies, and that's where the long-term focus is all about. And our effort really is on identifying teams that we can live with for 5 to 7 years, that we know will iterate and try to figure out their way into the market. And if that spirit always exists, you're creating an opportunity where you become interesting for someone to consider themselves coming in to buy this team, this special team, and what and the special stuff that they've done. So that's kind of the way we look at it. So we see ourselves very much as a medium to a long-term type investor. I agree with you on the challenges, but I also think that if we focus on what's special, people will come to buy. Whether it happens in a year or 3 or 5, I'm just confident that if the team is there and they're executing in a responsible way, managing finance as well and doing all their things, that their time will come. And we're seeing it happen. I think we'll see it happen faster than any of us here can imagine. I'm just in shock still. I think the industry is ahead of its VC support network. I'm really proud of what I've seen over the last day today in terms of innovation from the entrepreneurs that are out there.
Thanks, Emile.
I think I agree with Emile on this point. I think if you think of exit too early, like if you think I want to exit in 2 years or 3 years, then you build smaller companies, right? I think what you need to focus on is building really great companies, right? And that's the only thing that will attract an exit. So I think focus on building the business.
So don't really go out and push for selling your company. Wait for somebody to come and buy it. Yeah?
This would be ideal, but it doesn't often work that way.
Yeah,
this is the ideal scenario. Unfortunately, because of because of the market and the M&A market, mainly, let's talk about Lebanon in particular, private equity funds are non-existent. We look for trade sales, ideally. We try to package the company in order to introduce it to another. It's true, as Emile was saying, it's better to have to wait till the company is bought because you get higher multiples rather than go and try to package it to sell it. Anyways, the way we structure our investments, we always include a clause whereby if we own a minority stake in the company, the majority stakeholder, meaning the founders, they get the chance. We can impose a kind of a put option whereby they buy us out 4 or 5 years after the investment. Because our investment holding period is relatively short, it's going to be very tough to wait for a company to come and buy it out. Okay. So if we own 20–30%, we would sell it back to the founders, to the company, as long as it's profitable enough to buy us out at a low multiple. But that's the only way we can ensure to our limited partners, our investors, that we will be able to liquidate the fund within the short
best possible
time frame. Yeah.
Okay. We're gonna take a break from the questions and jump to a question that I want to ask the panel here from the preset list as well, which is kind of interesting as well with regards to the ideas that the entrepreneurs are coming up with. Somebody comes to you guys and says, I have an idea of an Arabic version of Facebook, but we're not just talking Arabic in terms of language, but proper localization of cultural and everything that's around it. Like, let's say somebody came before YouTube launched the MENA kind of Arabic videos or localized videos 6 months ago, came to you and said, let's do such a thing. Would you usually encourage it, or do you kind of are wary of local implementations of globalized, successful plans? What are your thoughts on somebody not coming up with an original idea, but with an idea that is more or less of a port with a local feel? Nobody?
I can. No, because we've done it out of those 7 companies we've invested in the past year. About 3 or 4 are locally or regionally adapted concept. We have a consumer finance company focused on the healthcare that's based in Dubai. They just got inspired from Amerifee in the US, and they made it locally based out of Dubai. We have a company called PinPay. They do mobile payment and mobile banking. They didn't invent anything. They just took the existing platform from an Indian company, and now they're targeting the Lebanese market with a couple of banks partnering up with it. There's no real invention there, but it is scalable, and they can generate serious revenues and profits. The third example I can think about is this falafel game company. We invested a very small round in it. Now, they've created their own strategy game, okay, and they want to focus on the region. Now, there are so many different strategy games around, but this one is particular to the region. Not only it's in Arabic, but the theme itself is Al-Futuhat Al-Islamiyya. Okay. So it's really relevant, culturally relevant to the region. So it is somehow, there's a lot of creativity, a lot of innovation. Of course. But they haven't really invented something.
Okay. But does it make it safer for you guys to invest in it if you've seen a model of it successful outside and just want to go ahead and launch it? Or is it equally treated with the same questions and kind of skepticism?
I mean, it'll have a lot of questions that remain the same in terms of team and adaptability for the region. But in some cases, like Walid said, I mean, it takes out at least the technology risk. So, this technology is out there, it's proven, it has worked. So now it's a matter of adapting it to the region, whether that would work here or not. Okay.
I think maybe just to add from my side, it's, the preference is towards local to global. Okay. Okay. So local innovation for global relevance. I think this is how the innovation cycles globally are emerging. I think there needs to be a lot more local innovation to keep competitiveness going globally. That being said, I think that comparables are important if for anything to help us understand potential. Okay. I mean, it doesn't have to be a direct replication. I think there are iterations on concepts and ideas that infuse a local
problem-solving perspective that may be relevant globally, and I find those to be really exciting. For the direct replicas, I'm a bit less of a passion for, but I'm always reminded that an elephant can't kill an ant. So just because somebody's huge globally, that doesn't mean that they can capture every single market opportunity, and they may have a chance to create their own unique and relevant space. So.
But at the same time, the entrepreneur has to show their relevance, their differential, and it's not just a feature that Facebook will turn on and suddenly you don't have a market. So it's very important that it's well thought.
Okay. All right, let's take more questions. Somewhere there. If the mic can reach her.
No mic.
The lady.
Yes, hello.
Hello.
My name is Hanna, and my question is, what would be for an early stage investment the typical rate of return you would expect after 3 to 5 years of investment?
What's the typical rate that you would expect for an early investment in 3 to 5 years?
For me? Yeah. Well, I'll just go ahead since I opened my mouth. It's a great question because the cost of our capital is high, right? And that's what enables us to be risk takers in a sense. So our expectation of returns. By the way, I don't believe in the 1 in 10 regionally. I think globally it may fundamentally be true because of the amount of competition there is on deals. I think we're all in a very lucky time in the Middle East and North Africa, in that we're this first generation that's creating this value. I think many more of us should succeed than global comparables would say right now. So with that in mind, I think to talk about a 10x sounds greedy, but I think is something we'd love to see, just as an example.
Do you see it?
I do. Yeah. I really do. Not with all of them, but I really think that we saw Dr. Osama talk today about the e-commerce numbers. I don't think we've touched on the potential, and I think as a region collectively, we're just starting to wake up to concepts of transparency, to concepts of value, to having choice, and I think this is going to impact how we approach everything. So I think it's actually a very exciting time. And it's also, just the last point, it's actually the most cost-effective time to build a business, which also helps in terms of the future returns.
Ziad, what do you think?
Yeah, I think, I think typically what I want to see is, I want to see a clear path to a 3 to 5x, that's typical. But I also want to see a path to a 10x that excites me. So if I go to a business and I don't find there is a way to do a 10x in that business, I lose passion. I'm sure the entrepreneur will quickly lose passion.
Barig?
Being growth stage, I would like that they don't burn the money I'm going to give them. And use that money for an acquisition, for growth, but not in the current operation. That's what we look for in general. So we're later stage than the group.
Just one comment on that. When we say 3x, 5x, or 10x, it's also 3, 5, and 10 for the entrepreneur, because it means the company grew by that much. It's not like we're taking, a lot away.
They're not as evil as they look, apparently.
We tried it, but we wouldn't.
Yeah, more questions. Let's go. The gentleman in the middle. Sorry, I'm making you run around a lot. Okay, we'll do that next.
What you're seeing in a lot of companies in more mature industries is a greater emphasis on doing an adequate organizational due diligence in preparation for an acquisition, and basically looking at the organization structure, looking at the role of leadership and the culture of the organization as it would fit with an acquiring company. To what extent are you preparing your portfolio companies for that exit stage when they're going to be fitting into another company or scaling up to an extent that they're going to be much larger than they are at the startup phase?
I think you guys kind of covered it when you said that sometimes you work with trying to find people who buy them. Is there anything else you'd like to add on what kind of preparation do you give to your startups for exiting?
Well, one thing is that the partners in the firm have taken 3 companies public, have done a couple of M&A activities on a large scale. So the experience that they have adds a lot of value in shaping the companies we invest in to be attractive, and that would make an immediate fit and so forth. We work, part of the governance that we do is naturally make them in that preparation stage.
And for us, basically, it helps that our parent company is one of the biggest investment banking firms in the region. So when it comes to that stage and road shows, I think they add a lot of value in that.
And Abraj as well. And Abraj as well.
All right, there's the question.
Hi, my name is Ali Nusuf. I'm from Kuwait. The focus of this conference is obviously the Middle East and North Africa, but my question is, are you guys open to investing in startups in the US that are going to expand to the Middle East within a year or two? Is that an option you look at? Thank you.
So the question is, would they invest once you guys intend on being in the Middle East, or if you guys have a business plan of being present in the Middle East in 2 years, would they invest in you now?
Exactly.
That one?
Yeah.
Okay, so they're not going to be present in the Middle East for at least, let's say, 2 years. Would you guys invest?
I mean, no.
You wouldn't?
No.
Okay.
Not at this stage.
All right, let's go with quick yes, no, so we can get more questions.
The question, if we add value, yes. If we don't add value, no.
For us, it's no.
No.
No. I mean, we've done it, and we would do it if there's a direct benefit of the service to the region, because sometimes it's just much more effective to build it out of region, even though it's directly relevant to the region. That's where the skill is, and that's where the entrepreneurs are. So. We finished.
Yeah, I know. I'm just thinking if we take another question, let's take another one from the audience. He's got a mic, so
thank you.
We'll go with you next.
Ahmed Taqatka from N2B. We've seen lots of international VCs such as Sequoia or others having partners, local partners, or even offices in India, China, even Sweden, but not in the Middle East. And they really help in exiting, just like what happened with Maktoub and Tiger Group. What's happening, or maybe not happening, in the Middle East that prevents them from coming here?
Oh, good question. Good question. Really good question.
Well, give it a go. One thing is that the ecosystem in the Arab countries are problematic. As an example, IntelCapital looked at Saudi for several deals and shied away because of the legal structure. So each country has an issue with it and so forth. But on the other hand, we've seen the Maktoub acquisition, we've seen SysDSoft acquisition by Intel just recently. We've seen there has been and there will be a lot of acquisitions happening. The only thing is that we add value in packaging it better for them to be acquired. We are entrepreneurs of the VC industry because it's our first time, and we're not. The rule book has not been written yet. We're writing it as we're going along. So that's one of the things that's my answer to you, basically.
Yeah. I'll just add 2 points to that. One is actually the investment environment and for example, contracts, enforceability of contracts and all of that. In many cases, it's still weak in the region, and that scares international investors. And another point is we're still really not a massive region. I mean, we're all from the MENA, so we tend to feel it's much bigger than it is, but the GDP of the entire region is around close to the GDP of Italy, for example. So it's easier for Sequoia to just go set up a fund in Italy, and they have access to almost equal opportunities.
And maybe just to add a point, that there's also, if you look at it from a VC investing, global VC investing in the region here, a big part of it is that the VC investing is a very personal process, and partners like to be close to their investments. or like to feel that, you know, they can add value to it. So having it in the Middle East is a little bit difficult for them to manage. And, you know, let's take West Coast US as an example. You know, Latin America is much closer. You know, they can relate to the culture maybe a little bit better. But I think this will change over time. I mean, I was having a conversation, I don't know if he's in the room, with Peter Kellner. And, you know, they're spending a year in the region here to learn about it ahead of opening up, which is, I think, just absolutely the right thing to do. These things will happen, but it'll take time because it's very personal.
The same thing was asked about private equity, for example, on Carlyle and the big players, and eventually they did come. So.
Okay, I don't know where the mic is. I don't know who's been appointed to ask some questions, but there you go.
Hi, my name is Khaled Qasim, and I had a question regarding financing. Are you open to other forms of financing, i.e. debt or subordinated debt? And how important is a seat on the board for you guys?
Good question, I think. Who wants to? Yes.
We don't do that, and we want a seat on the board. Simple.
we go with convertible debt. We don't just provide the pure. We're not a bank. We're a VC. So eventually, it has to be converted prior to an exit or upon a next equity round. But we do not go with a pure debt. And we usually take a seat on the board.
And maybe I just want to add one thing from the way we look at it. It is convertible debt is what we would consider. We wouldn't consider direct. I mean, we would do debt to a portfolio company. So if you've invested in a company, I have no problem in giving it bridge financing if it needs to undertake something. But we wouldn't do it for a non-portfolio, you know, where we don't have equity in a company. On the board issue, there's two ways to look at the board issue, right? So I'm not averse to not sitting on a board, but I want the economic value of having a board seat. So so maybe the entrepreneur and us sit down together and realize that I have absolutely zero value to contribute at a board level. I'm perfectly okay with being told, you know, let's get this guy. But I would want the economic value of having a board seat as part of my share structure. So just to.
Where's the mic? It's traveling. Can we please?
Good evening. My name is Hussein al-Nashif from Seattle, Jordan. My question is, how much it takes from the day the entrepreneur presents his business to the day you really invest, give the money? How much it takes in days, and do you have any strategy to make this period shorter?
It's a bit of a
for each one,
it could be anything. It's a tough one. What's the longest time it took? Let's go with. It's very, very specific. Depends on whether there's partnership going on. It's
an average. Yeah.
Not the longest. Actually, what I would say the benchmark for us is 4 months.
4 months?
4 months.
Okay. You guys agree 4 months is a good average? So if it's not within 4 months, something is...
a complication is there, that's specifically for that deal, whatever. But our benchmark is 4 months.
Okay. Anybody else? Okay, first row. Let's kind of jump. Got 5 more minutes. We'll take a couple more questions. See how many we can take.
Twice.
Sometimes you're lucky. You just have to play your cards right. But thank you very much. My question to you is: how much should an entrepreneur pay himself?
Follow.
It's a bit of a general question, but again, an entrepreneur goes through a very difficult time prior to VC. At least that's the perception. And then, should he pay himself at market value, below market value? Is double dipping still frowned upon? What's
are you looking for a specific figure or like a ratio? Because again, from one country to another, that would
a specific figure would be quite difficult.
Yeah.
So I think let me comment on that. I think the entrepreneur should not be very comfortable in his position. At the same time, the entrepreneur should not be under a lot of stress in his position, right? And of course, it depends on the seniority of the entrepreneur. Is he a young guy? Is he a senior guy? I mean, there's so many factors, but not too much to make the entrepreneur sit back and enjoy his life completely, and not too little to make him stressed and can't pay the bills. I think that's
So if an entrepreneur is worth $500,000 out in the market, getting a job on his own, you'd pay him half of that just to keep him uncomfortable?
Putting a number is again, it's a very specific situation, so I won't put numbers.
It's for the sake of example, of course, but yeah, I really...
Yeah.
Yeah,
the point is to make him live decently. That's the point. Until the objective needs to be to make an exit out of this company.
I understand what you mean, but my question is, should an entrepreneur accept being paid less than what he would make outside just because he actually is leading the business?
I would expect that, yes.
Well, one other criteria is actually also how much is he investing in the business.
Yes.
So if he's putting a lot of money into it and then he wants a big, but he wants a slightly larger salary, maybe that's okay. If he's putting nothing and wants a big salary, then it's like they mentioned, it's a cash cow. He just wants to sit back and make money.
I mean, it's just like, I think the easiest answer is it's just like any other company. It needs to make sense. It needs to make business sense. It needs to be profitable. It needs to be not so extravagant. I don't think there's a specific figure that anybody can share. The expectation is to sacrifice, well, generally speaking, if you are investing in a company, or whether it's time or effort or anything like that, getting paid less than what you would for a regular job, if the end result means that you get a share and something out of it, then it does make sense. Because
No.
Oh, yeah, well, of course.
I disagree, actually.
I disagree
I've seen a lot of entrepreneurs that actually... Sorry, I've seen a lot of entrepreneurs that actually don't want that extra $5,000 of salary. They want to hire a new guy because he will increase their sales and the company will grow faster.
And the cost of this extra $5,000 of salary is giving away equity, right? So, I mean, you would expect the entrepreneur to kind of understand the potential of the business, right?
Because also the return of that is going to be higher and higher. So the balance act, so forth. One of the things a smart entrepreneur would look at it from, okay, a holistic perspective, business-wise and so forth, whenever take into consideration everything that's been said.
Okay, I'm sorry, I can't take any more questions. It's almost 6 o'clock. You're not even going to take a coffee break. I really can't. I'm sorry. You promised to make it short? Okay, fastest question
in the West.
My name is Amr Diabas. What about the investing in the social responsibility?
CSR.
By hiring disabled people. We have around 30 million disabled people in the Middle East. I have a call center. 95% from the call center agent is disabled. They have lots of chance. They have potential to grow. So why don't we invest in these people?
One person to answer this. Who's going to be?
We actually have an arm at Abraj that actually focuses 100% on that. It's called Asset, and they invest in social responsibility projects. And the employees are expected to give 5% of their bonuses. So there's a whole scheme around it. We can chat about it later if you like.
I just want to add one thing. I mean, your question is great, right? And I think it's the whole nature of what business values and business success means is fundamentally transforming. So I would envision that more and more business outcomes are measured by social impact. So I think that the trend is moving very much towards investing in these types of ventures moving forward. I mean, that's just my gut instinct. I think the world's taken a big slap focusing purely on the financial metrics, and somewhere along the way, whether it happens in 2 years or 10 years or whenever it happens, but I think we're shifting very much in terms of business values and what a company's value truly is on things like that. So you'll find a lot of support, I think.
Thank you, guys. To sum it up, so why would anybody come and give you a piece of their pie? Not only because you guys give them money and financial stability, but because you help them from everything from matchmaking to setting up a business plan and giving them advice, or even looking at, just having somebody else look at your idea from an objective point of view. What is it that you should come with when it comes to looking at VCs? Apparently, the best thing they look for is for you to be focused on your idea. The more enthusiastic you are, the better. I mean, we've got Emile here even falling for emotional blackmail. He feels personally connected to some of his investments. Again, general rule not always applies. Don't sell, wait for somebody to come and buy, generally speaking. Don't burn the money that Barig gives you. He's quite concerned about that. In terms of what amount of return on investment are they looking at, if we're saying anywhere from 3 to 5 years, the general answer was 5 to 10 times. I don't remember all of these, I wrote them down. Why would international investors not come here? Answer is, generally speaking, it's a bit of an immature market, but it's happening. And some people are already looking at coming here and setting up and understanding, studying the market. Convertible debt is always better than debt. That's something that the gentlemen here prefer. And if you ever do work with them or any other VC, wait for 4 months, don't nag before that. After that 4 months, it might become problematic. I'd like to thank everyone here, Emile, Walid, Tarek, Ziad, Barig.
And a thanks to our moderator.
Yes. Well, thank you guys.